Hey everyone, Jeff Dorman, Chief Investment Officer at ARCA, back for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the digital asset markets for the week. As always, this is not investment advice. Please consult your own investment professionals for any advice, but we will talk about the markets like we do every week. We also write a blog. You can find it on our website, ar.ca/blog. If you prefer to read about what's happening in the markets. So, look, it's been about 4 straight weeks of downward price action, obviously getting a little bit of a reprieve from that so far this week, but basically 4 straight weeks of downward price action really continues to diverge away from, what's happening in the rest of the macro land, which has actually traded pretty well up until last week. So maybe digital assets were just a leading indicator. Maybe sometimes crypto markets do tend to get ahead of other markets and maybe see something that the other markets don't see yet. A little hard to see that because usually that happens more with the high yield bond market. And we're not really seeing anything with related to credit spreads or anything else getting ahead of markets. So you're not really seeing companies failing. You're not really seeing any credit issues. Clearly, we're headed towards a 25 basis point reduction in the Fed funds rate later this month. So the question is just what is going to draw the attention of the markets from now until the election? Obviously, in simple terms, a Republican victory would be viewed as good for crypto. A Democratic victory would be viewed as bad for crypto. But outside of that, mostly markets tend to trade up anyway after elections are over because markets hate uncertainty more than they actually care about individual outcomes. So there's a good chance we see an end of the year rally anyway. But the question is, it's only September 10th. The election is almost exactly or just under 2 months away. What's going to hold our attention to then? And the sad answer is there isn't much. And I think that's why you're seeing equity markets reprice and credit markets reprice better than crypto. There's really just no real reason for new investors to come in right now. Any new investors would probably be waiting until after the election at this point. Existing investors, they trade around a little bit, but there isn't anything that's sort of exciting. It's been really hard to find kind of a new narrative other than just the ETFs. And in fact, if you've been paying attention to crypto Twitter, you saw a little bit of infighting over even just last week. Guys like Jim Bianco Research, talking about how the Bitcoin ETFs have basically been a failure. Others obviously jumping on saying that's ridiculous. Guys like Matt Hogan at Bitwise, as well as Eric Balchunas, the Bloomberg ETF strategist. It's just unfortunate that this is all we continue to talk about, right? And I think this is where things get generally hard for crypto native investors, is that nobody really wants to talk about Bitcoin, right? Bitcoin's fine. It's been around for 15 years now. It's great. It's always been a binary outcome with Bitcoin. It's either worth nothing or it's worth probably tens of trillions of dollars. And anything in between is just a probability path function of whether or not we're going to get there, right? Bitcoin truthfully should be valued using Black-Scholes options model or maybe using like a CDS contract model because that's really what you're betting on, right? You're either betting that this experiment with Bitcoin works and it truly is a new form of gold or some new form of store of value that you can actually transfer pretty easily around the world. And if so, it's worth way more than it's trading at today. Or it's worth very little. And even though it's been 15 years of growth, there is still that probably very small probability now that it just is worth nothing and people give up on this. But there's no reason why it's trading at 55,000 or 70,000 or 4,000 or 150,000 other than just tracking demand and that increased probability of future success. So that's why it gets so up in arms when I see these kind of tweets about things that are failing. I mean, the goal of Bitcoin was never to be packaged inside of an ETF, right? Here we have this great real-time settlement option that should be bringing users on-chain. Instead, what we're doing is we're bringing this settlement system into the traditional finance rails of T+1 and T+2. So it really doesn't make a whole lot of sense. And why there's so much focus on this, to me, is less about it being super interesting and more just an indication of just how little there really is going on outside of this. And we'd mentioned a couple of weeks ago talking about the crypto paradox, which is at this point almost anybody who doesn't have an actual agenda, who just looks objectively at the technology, is starting to see real use case possibilities of this technology. But it doesn't hide the fact that the actual usage today is very low. And it's hard, right? Because if you know that one day we're going to use airplanes for all kinds of travel, but no one's allowed to ride an airplane, or we know that you're going to be able to send everything over an email one day, but right now the government won't let you do anything but jokes. It really makes it hard, right? Because again, the objective, obvious answer is we have a new technology that should be used for a lot more than it is used today. You should have all stocks and bonds and real estate and hard assets being settled on chain. But the governments aren't allowing that to happen right now because of regulatory reasons. And as a result, we're stuck with making these bets on the future usage while having to acknowledge that there really isn't that much usage at all happening right now. So that's the challenge, and I don't see that getting any better from now until November. Now, that doesn't mean that prices won't go higher between now and November, right? I mean, clearly we have a debate, U.S. presidential debate tonight that could stir the pot a little bit. We've got the FOMC meeting later this month. Who knows what kind of black swans or other things can happen between then. But from a pure kind of what are we excited about inside of crypto, there's just not a lot of new stuff to talk about. And as a result, that's why markets tend to care even more about things like seasonality. Seasonality, all those tables you see of which months do better for which markets, it's been around for multiple decades. It's not new. It's just most of the time markets don't focus too much on them because there's other things around. But right now, with very little going on, everyone's focused on the fact that September has historically been a horrible month for digital assets. Over the last 7 years, 6 out of 7 of those Septembers have been in the red, with an average move of down 7%. In fact, last year was the one outlier there where we saw a positive move of 4%. But the same thing is true of stocks and bonds as well. The S&P has been lower for the last 4 Septembers. Gold has actually been lower in 10 of the last 11 Septembers. 10-year U.S. Treasuries have seen higher yields in 7 of the last 8 Septembers. So you've got a lot of negative sentiment in the market right now. And the question, as always, is, well, when everybody knows this, does it already get priced in? And it's a hard question to ask. What I would say is that the last 2 years, really, the best way to make money has just been to fade consensus. We've talked about this multiple times. Everybody was expecting a recession. They didn't get it. Expecting a full-on banking collapse, didn't get it. There's been all kinds of views really since the rate hiking cycle started at the end of 2021 that have just been dead wrong, and fading those has been the best way. So perhaps if you're a contrarian, you look at September and you look at the weakness that everyone's expecting, and you make a long bet based on that alone. But we'll see. I'm hoping that as summer subsides here, people start coming back, and you start to get a little bit more of the market unthawing, that we'll have more to talk about in future weeks. The one thing I will shout out to is something that we wrote about this week from Wes Hansen, our director of operations here at ARCA. Saw some interesting data points over the last couple of months, in that there's just been a huge push for new service providers into crypto. And while on the surface that might seem like a good thing, that there's more and more people seeing money in this space and wanting to get involved, unfortunately, what it seems to be is just that there was such a fallout from 2022, both on the asset management side as well as the service provider side, that you're seeing more and more of these desks and funds just carrying so much baggage with them that it's easier just to start new and start fresh, new name on the door, new fund, new service provider, et cetera, but offer the exact same services. And unfortunately, we're seeing a lot of that right now with just tons and tons of new players entering the market with no barriers to entry, really, offering the same tired services that we already have. And it's interesting, what caught my eye about that was, when I was working in traditional finance markets in the debt and equity world, we never changed service providers. Nobody did, right? I mean, you'd take a meeting once a year just to be cordial, but they all offer the same service. It was completely commoditized. There was really no reason to ever switch unless you had a massive price reduction or somebody came up with some new product. 5 years ago in crypto, that wasn't the case because none of these service providers were really established. There was all kinds of changing, whether that meant from changing auditors or custodians or OTC dealers or lenders or exchanges, et cetera. It made sense. But at this point, all these players are pretty well established that still exist, and the services work. And I think it's going to be really, really hard for a lot of these new players to come in by just saying, hey, I'm XYZ, come trade with me, and we'll do the exact same thing everyone else is doing. So it'll be interesting. We'll be following that to see if there's any actual traction or movement. Hopefully, in my opinion, they get very little traction until they start to do something innovative, right? Actually talking to customers, like what is it that you're actually missing? What is it that we can do that's differentiated from what you're already getting? That's when you start to see growth. That's when you start to see people care about markets again. and hopefully the struggles that some of these new entrants, not that I would wish ill upon anyone trying to build a business, but I think they're going to struggle quite a bit. And only way to fix that is to offer something unique and interesting and bold that the space isn't offering yet. So we'll see. We'll be rooting them on. But it was an interesting observation from the desk that I thought I'd pass along to you. So away from that, like I said, we're watching markets. Obviously, a little bit of a bounce back from the a week ago with the carnage. Starting to see a little bit of strength in some older names, things like Aave and Uniswap and DeFi. Maybe some cash flow producing tokens like Rollbit. A couple of oldies that are starting to catch on in the NFT world, like ApeCoin and Blur. So I'm not sure there was any real reason necessarily for a lot of these moves, but at least it shows that there's capital being put back to work, and certainly people, traders and investors, looking to find something unique to invest in rather than just focusing on the Bitcoin ETF and the Ethereum ETF. So that's it for this week. As always, check out the blog if you want to read more in-depth analysis at our website, ar.ca/blog. If anybody would like to be a guest or knows somebody who wants to be a guest and talk about markets, please go to my Twitter account and look at my pinned profile. You can see a form there where you can request to join me and talk about markets. And we will be back again next week. Thanks, everyone.